So we've always and only talked about large, mid and small caps, and that's understandable because there is no formal definition of what a microcap is. But had there been one, then it would form a subset of small caps which would include companies that are ranked beyond the top 500. In numbers, we are probably looking at companies whose current market cap is below 6,400 crores, but that doesn't necessarily mean these companies are completely unknown. I mean, from this list here, we have Borosil Renewables, which is a leading player in solar glass manufacturing, Quest Corp, which is India's largest employer in the private sector, SIS, a big name in the security industry that did over 11,000 crores in sales last year. And then there are other known names like Symphony, Greenlam Industries, JK Tyres and many others. My point is small microcap companies can actually be industry leaders, and many of the world's best and biggest investors have made their money by identifying stocks early in the day. In this video, I'll give you a macroscopic overview into microcap investing and how a proper knowledge of it can help you generate excess returns over time. I'm sure there will be a few follow-up videos to this, but if you like this video, then do give it a thumbs up, and if you haven't subscribed to my channel, then please do what this poor micro Shankar has been doing for some time now. Let's begin. The term microcap evokes all kinds of emotions, and while some are factual, a lot of it can be merely a misunderstanding, which is why it's important to examine the pros, cons, or rather the specific characteristics of it. So firstly, microcap stocks are like stealth fighter jets, that is, they are always flying under the radar of research analysts. In fact, as per a study conducted by Motilal Oswal, 40% of the companies that are part of the Nifty Microcap 250 index receive no analyst coverage, and only 12% of those 250 stocks have 5 or more analysts tracking them. In my view, this blind spot amongst institutional investors works in our favor, as it leaves significant room for investors like you and me to find undervalued stocks. A second characteristic that's unique to microcap companies is their high degree of insider ownership, with almost half the companies within the Microcap 250 index having a promoter holding of over 60%. So there is skin in the game, and as long as the promoter is progressive and ethical, the presence of an owner-operator is a very good sign from the shareholder's perspective. But on the flip side, and this should not really bother retail investors, but generally these businesses have very little in terms of free float, which makes it a bit difficult for anyone who wants to pick a significant stake in the company. A third major characteristic and a debatable point is liquidity, and again there are two sides to it. The story you're likely to hear is that microcaps have low trading volumes, which means it might be difficult to enter or exit a position. The bid-ask spread might be wider, making the transaction more expensive for investors. And of course, a lack of liquidity leads to a higher degree of volatility. However, the other argument is that illiquidity is a big driver for achieving multi-bagger returns, as many of these microcap stocks are inefficiently priced, and there is also less competition, with only retail and long-term investors getting attracted to it. A fourth element in our study is of course performance, and over these last 18 years, the Nifty Microcap 250 comes a close second amongst the broader indices with a CAGR of 16.5%. On a rolling return basis, and as expected, the swings are high and wild for this index over the short term, but it kind of stabilizes in the 14-15% range over a longer period of time. I also examined the different indices on their yearly returns, and what comes out clearly is that microcaps perform best when the markets are rising fast, as we saw in the year 2007, 2009, 2014, 15, 17, 2020 and in 2021. Likewise, microcaps were the worst performers when the market started falling, as we experienced in 2008, 2011, and also in 2018 and 19 when midcaps and small caps were correcting themselves. In other words, and this is probably the fifth characteristic, that is, the movement of microcaps is highly volatile, and amongst all four indices, this one generally peaks the most and also falls the most. To put it differently, a high volatility is pretty much the price one pays for better performance, but as we have learned in other videos, especially in the Superman video, it is very much possible to manage volatility and make high returns both on an index level and also on a portfolio basis. Other than these 5 major characteristics, microcaps generally offer a slightly lower dividend payout. There's a lot less transparency, or might I say, a lot less information comes forth from these companies. There's always that chance of promoter fraud, price manipulation, pump and dump schemes, etc. But what will always be a charm for the microcap investor is that chance that you might pick a future HDFC Bank or a Titan or a Reliance Industries and see your wealth multiply by thousands of times. So there are benefits, there are also some niggles, but my suggestion here is to not look at microcaps as an isolated decision point कि भाई small cap लूं या microcap लूं. Instead, I would suggest one looks at microcaps as part of one's entire portfolio, and based on what you have, your risk profile, etc., one can determine how much of microcaps is ideal and of course which investment option would work best for you. Alright, now let's understand how one can invest in microcap companies. The first and the most recent way of investing is via a mutual fund, and just last month Motilal Oswal AMC introduced a Microcap 250 index fund, which is a basket of 250 stocks. It covers companies with a market cap of 1,000 to 10,000 crores. The scheme is passively managed as it replicates the Nifty Microcap 250 TRI. It's well diversified and offers exposure across sectors. And as we discussed earlier, on a backtesting basis, it would have done better than most broad market indices in terms of performance and would have also been the most volatile of the lot. If you want to know more, then do watch a video where Nirav, who heads research for Fisdom, discusses the finer points of this very fund with Pratik Oswal, who heads passive funds at Motilal Oswal AMC. That video is already live on Fisdom's YouTube channel, and you'll find a link to it in this video's description. My hunch is a lot more AMCs will come out with similar funds, and personally a 5, maybe 10% exposure to microcaps is something you can consider as part of your larger wealth building portfolio. Okay, so this was passive management, but given the pricing discrepancies, the lack of liquidity and the valuation gaps, I think there's also a strong case for actively managed products as well. Now, one of the ways this can be done is via a PMS. So some of the microcap specific offerings include one by Centrum Microcap. There's also an Equitas India Opportunities portfolio. Then there's a PIPE strategy by ICICI Prudential PMS, a small and microcap portfolio by Sage One, and a few more. You can probably find a lot more options on the internet, but remember the minimum ticket size for most of these PMS offerings is a cool A cheaper alternative to PMS is of course a small case, and between a couple of offerings by Quantas, Hidden Gems by Cedrus, a small case by Omkara Capital, another Hidden Gems by Sumit Capital, and a few more offerings, I think investors have quite a number of options to choose from. Of course, before you do anything, please do ensure you read up more about these products, their construct, the fund manager, fee structure, the redemption rules, etc. Now, other than passively or actively managed funds, there's always the do-it-yourself approach. And in this section, we'll be examining some of the techniques that we as investors can employ to uncover some of these hidden gems. In this context, I found a lot of material by Ian Castle, who is a microcap focused full-time investor, and across his articles and videos, he talks about 7 essential selection criteria. So very quickly, number 1, the microcap company should be a market leader. So we are talking about companies like Tata Coffee, Borosil, Antony Waste Management, Sigachi Industries, HPL Power Systems, etc. It should be run by intelligent, fanatic iconoclasts, and this is where I'll urge you to read an article by Professor Bakshi that I've linked in the video's description. The microcap company should be profitable and sustainably profitable, which means it should be able to self-fund its growth. It should have low or no debt, a clean capital structure with low amounts of warrants and options as a percentage of outstanding shares, no or low institutional ownership. And of course, we want to invest in businesses that are grossly undervalued, so something like a 50-60% discount to intrinsic value. Now, these are just words, and we obviously need some hard metrics to convert the 3,000, 4,000 odd microcaps into a set of potential stocks. So I'll take cues from what Ian Castle said, and while you can always customize it, here's what I'm really looking for. Number 1, we don't want really small companies, which means I'll limit my selection universe to companies that have a market cap of at least 500 crores. Secondly, we want owner operators, so it's ideal if the promoter shareholding is at least 50%. Number 3, we want revenue growth and profitable companies, which in my view should be at least a 15% growth in sales and perhaps a 20% growth in PAT every year for the last 5 years. Next is leverage, and debt as a percentage of equity should be low. So let's say this is 20% or even lower than that. Number 5 is the effectiveness of turning capital into profits, that is the return on capital employed, which should be 20% or higher. And we also want to understand the relative valuation, which is why we want companies whose P ratio is lower than the industry's price earning multiple. Alright, so what started as 900 companies is already down to just 21 microcaps, and ideally this is the stage where an investor should look beyond the screener and start examining every company for what it is. This requires you to do a thorough fundamental analysis, which includes an examination of the last 3 years' annual reports, the earnings transcript of the last few quarters, any news surrounding the company, research reports by equity analysts, etc. But if one broadly looks at the concept, then I think the screening process itself makes the selection of microcap stocks a lot more powerful. For instance, remember I said we want a sales growth of over 15%. Well, the median 5-year sales growth of our 21 companies here is a lot higher at almost 25%. Similarly, let's check the return on capital, and while we had taken a minimum of 20%, the screener when combined with other variables has given us a portfolio where the median ROCE is much higher at 38%. So there's a lot of value in doing this exercise, and although we are backtesting here, it is still interesting to note that these 21 stocks have delivered a 5-year CAGR of 37%. However, as we saw in the video on monopolies, one can use your own grading mechanism to identify which stocks might do a little better than the other, or one can also apply a ranking-based selection of stocks like what we saw in the magic formula video. So that's a little homework for you, but believe me, the more you try it yourself, the better you will get at it. I should also add, purely as an FYI, that while microcap investing is just finding its feet in India, fund managers in the more developed markets are doing a lot more to improve their selection criteria. For instance, there are more metrics at play, and if you're interested, I've attached an article on how to use QI value in one's portfolio, which I thought was very interesting. There are microcap funds which are built around factors like value, momentum, and earnings. And although this data is a bit outdated, it's generally the value factor that seems to be doing the best. And there are also microcap strategies that make use of concepts like RSI, the relative strength indicator, the Piotrowski F-score, the average trading volumes, etc. Okay, so we've broadly looked at what is a microcap, its characteristics, the different investment options, and I've also put forth some selection criteria that one can develop further. But what's equally important when working with microcaps is our own behavior, and I want to share some investing rules which might seem basic but are actually quite powerful and important. Like firstly, microcap investing requires a lot of patience, and it can sometimes take years for the share price to catch up with the company's true worth. Now this is of course easier said than done because people do get impatient and sell their stocks before the upside happens. A second essential behavior is the ability to say no, and what I mean is that one has to be picky and really disciplined when it comes to selecting microcap stocks. Another good practice is not to buy everything at one go, and this comes from Ian Cassell, who prefers to invest 1/3 of his capital after his own due diligence. The second 1/3 happens after meeting the management team, and the final 1/3 is invested after the management has executed at least 25% of what they had initially promised. In other words, as Mr. Cassell's conviction in a stock continues to grow, he steadily but surely starts averaging up. The fourth important investor trait is to be able to differentiate between business performance and stock performance, and especially in the case of microcaps, one can see dozens of scenarios where the EPS over the last 3 years has gone up by say 30%, which means the earnings have more than doubled. However, the share price is still at the same level. This generally means undervaluation, and unless something is fundamentally wrong, it's typically a good time to invest in such stocks. A fifth, final and important lesson is to give oneself a sufficient margin of safety. Now, we have discussed margin of safety in a previous video, but when it comes to microcaps, the margin we are referring to comes from the company's growth potential, and one should find businesses that can grow its business and profits by 300, 400, maybe 500% over the next 3 years. My point of sharing these learnings and best practices is to reiterate the fact that investing in a microcap needs to go beyond a screener, and one has to spend time evaluating the management, the business model, and the company's growth runway. For your benefit, I have put together a checklist that you can use when evaluating any small microcap company. And if you're looking for ideas, then do try out a forum like Value Picker or Reddit, where a number of amateur and professional investors have generally posted their investment thesis. I sincerely hope you found this introductory video into the big world of microcap investing useful and informative. Personally, about 40% of my own direct equity portfolio is in microcaps, so it's an ever-learning topic for me, and therefore you can expect a few more follow-up videos over the coming weeks and months. Once again, thank you for your time. Please like and subscribe to my channel, and I'll see you 3 days from now. Until then.